Hello everybody, welcome to the Fundamental Analysis webinar. My name is Troy, I'm a Senior Account Manager with AvaTrade. I'll be leading the session. As we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, please let me know. So two driving stories today fundamentally that we'll take a look at that are moving the markets. Kind of related in terms of the direction that they're moving the markets. We'll take a look at what's happening and then look for some opportunities on the charts, understanding the fundamentals first. The risk warning, obviously, we need to go over that each time we do a session. Any trades you make obviously have risk. No one trade is guaranteed to make profits, although each and every trade has a good possibility of profits. You want to manage the risk in a way that makes sense, just in case any trade that you're doing goes bad. And so you could use, obviously, stop loss marks, hedge positions, or a special feature that we have called AvaProtect that allows you to protect against losses for defined time periods for a small premium cost in the beginning. That's available on AvaTrade Go and the web platform that we have as well, the Web Trader platform. So we'll take a quick look at that as we move forward to make sure that you're comfortable with everything with that. Now, as we get going, keep in mind there are two types of fundamental analysis that we do, or two types of fundamental news. One would be regular economic events, things such as jobs announcements, factory production numbers, these types of announcements that are scheduled in advance for exact day and time, and we know exactly what the information will be about and what assets it's likely to affect. And so that type of fundamental analysis, we'll take a look at some of that today. It's easier to plan for in terms of timing and scope, but there is another type of fundamental news as well, what we might refer to as extraordinary economic events that we also need to account for. Now, those examples of those would be like the Brexit news that has been breaking from time to time, or news about the pandemic, vaccine developments, these sorts of things. You just don't know what the headline will be or when it might come. And those types of extraordinary economic events or extraordinary fundamental news, you can account for in terms of movements that might occur. It's not as easy to account for the timing of them, but the existence of them you can account for many times with pending orders, buy stops and sell stops to handle unexpected news and actually get in on some of the potential movements that arise from breaking headlines. So as we go along, feel free to ask questions, chime in whenever you see fit, and ask questions, give suggestions or input. It is appreciated. All right, so we'll start out here on AvaTrade's main website. What I want to show you is if you look under the trading platforms, you can find the AvaTrade Go mobile app. This is where you can download it from your app store, and the features on it, we'll take a look at the Web Trader platform. It has the same features on our mobile app as you have on the Web Trader platform. They both trade on top of your MT4 and MT5 accounts. So it's not, you don't need a separate account. They trade right with your MT4 and MT5 accounts. So if you log in from up here, you would find yourself in this platform that we have. Now, this platform is not on everyone's user account, but it can be. So if you've been with AvaTrade for a while, from before we had the Web Trader platform, you may ask to have it added to your account if you're not seeing it when you log in from our main website. Otherwise, you should see it, especially if you are newer to AvaTrade. It would be their standard now. So this platform has some offerings in terms of fundamental news. Since we're talking about fundamental analysis, we can quickly take a look at where you can find some fundamental news. If you click on the tab here in the upper left, and on all live accounts, if you're new to AvaTrade and you're only working on a demo, welcome. You will see the Trading Central feature. Even in a demo account, you'll see the economic calendar from your demo account, but on only live accounts, you can use the more advanced tools from Trading Central. So once you open your live account, you'll be able to see, for example, Market Buzz, which brings fundamental news to you for the most trending assets. So as we look, a lot of assets are trending evenly. They're based by the size of the bubble. And then you'll also see one that's trending with a lot of publications coming out on it. So if we take a look, we can pull up articles on that particular instrument or asset, and it talks to you about that particular instrument to trade on. It gives you up-to-date information about that instrument. Now, quickly, you can get technical analysis as well. If we look here, this is not a technical analysis webinar, but I might as well show you. The technical analysis is here for FX pairings mostly, and you see the breakdown, what direction the movement is expected to go, the entry points, exit points, price levels, etc. So those are there for you as well, free of charge on our live accounts. So I mentioned the AvaProtect feature. So let's say we look at the fundamental news, we decide we know what direction we want to trade, and you pull up an asset like gold, and I can, let's say I want to take a buy position. I can take a look here and say, you know, maybe I want 10 ounces. And if I'm buying on gold, perhaps I want my take profit at, I don't know, 2,000. Maybe I think gold will reach 2,000 as an example. And I look, I say, wow, my possible profit, 1,200. That's a nice gain. It would be a huge % gain on my current equity. And then I take a look and I say, all right, stop loss. Maybe I want my stop loss to be, I don't know, $25 down. So I'm looking at maybe 1850 something. So perhaps I put my stop loss at 1855. Let me get on the correct side of the decimal. There we are. So I look and I say, okay, risk about 250. And looking at my balance, I say, wow, that's more than 10%, right? So you see that the order window is acting as a trade calculator for you and can help you decide whether the exposure distance to your stop loss, whether the trade size is what you want. And so perhaps I say, you know what, let's cut that in half. I'm only going to risk maybe 122. It's a lower percentage of my balance. This is calculated, by the way, to your account currency, whether you're Euro, GBP, calculates your exposure for you to whatever price you put for your stop loss. And then maybe I'm looking here and I say, okay, 600 potential profit. Maybe I expect a lot of volatility here over the next day or two because of the US negotiating a new stimulus package. It could go good, it could go bad. Those negotiations, maybe something with the Brexit, I think could cause gold to fly the wrong way or the right way. So perhaps instead of a stop loss, I decide I want to start with AvaProtect. And I can protect it by the hour, okay, by the day. Maybe I want to put 2 days protection. I see, wow, for 1 day, it's $41. For 2 days, it's still only $41. So it doesn't even cost me more to do 2 days protection, no matter how far it might go the wrong way during that covered time period. When the coverage expires, whatever negative floating is there would be added back to my account, and then I could add a stop loss if I wanted to. So it's a very nice feature for managing risk. I don't think it's right in every circumstance, but if you expect a lot of volatility and you think, wow, it could go flying the right way, in which case you keep all your profits, or you think also if the news breaks the wrong way, if the fundamental news, you know, that type of unexpected headline hits, you're covered for that time period. no matter how much it might go the wrong way. So it's a unique feature that I don't think anyone else offers. And it's available on gold, silver, and all FX pairings with us. So very, very nice features. And I can look at my open trade. I have one running with AvaProtect on it. I'm in profits of $12. I'm covered if it goes the wrong way. You see here it has AvaProtect on it. The coverage goes to end of trading day on the 31st. So to the end of the year, basically, at 5 p.m. On the 31st. And so I'm protected. I'm in profits. If it runs the right way, great. If it plunges the wrong way, I already had a fee up front, and I don't lose anything more during that time period. Ibarra stop loss, you're putting a certain distance to your stop loss, and it could be a lot bigger risk than what you're risking with the cost of AvaProtect. Now, the stop loss doesn't expire, right? AvaProtect eventually expires. Then you would want to add a stop loss potentially. Good question. Christian is asking, do you have to let the time period expire? And the answer is no. So if I'm looking here, the expiration is at 5 p.m. on the 31st. What if I was in $1,000 profit now? And I said, you know what? I want to close the position. I can close it. The protection ends early with me in profit, or the opposite. What if I was 1,000, gold plunged the wrong way on this position, let's pretend, and I'm $1,000 in the negative, but I see a support level and I think now it's going to go back up. But my protection didn't end yet. I can close the trade early, collect the money, the payment for that negative floating from the protection, then reopen if now I think it's going to go the right way. Open a new position. And with that one, I could just put a stop loss below that support level in that scenario. So you have the flexibility to close early and collect any negative floating from the protection. Good question. Okay, and also you'll notice, and I meant to show you this, you'll notice that in the order window, if you're doing a pending order, buy or sell, you don't have to tell it what type of pending order. If I want to buy from a lower price, then I put the price I want it to buy from. Execute when price hits. That makes it a pending order. I put a higher price, that's a buy stop. I put a lower price, that's a buy limit. I don't have to know those technical names with this platform. I just tell it where I want it to buy from or where I want it to sell from, and it makes it the right type of pending order. For those of you with experience trading, you understand on the MT4 or MT5 platform, you have to tell it a buy limit pending order and then program it to buy from a lower price, as an example. So it's less technical here. It's very easy to place pending orders. Let's go ahead and look at the fundamental news. What's happening today? EU looks to new chapter in relations with Britain as Brexit deal is signed. Okay, so bullishness on the pound, right? That's what we would expect, and maybe the euro as well. And a quick look shows volatility is down. The VIX volatility index here is down. So that means fear is dropping, futures are green. So that's a rising market, right? The fundamentals show positive sentiment right now. Positive headline about a deal between EU and the UK. Futures are green and fear is down. The volatility index is down nearly 3%. So that shows positive sentiment so far. Dollar weakens further as commodities, currencies, and sterling gain. Okay, makes sense. The pound is gaining against not just other currencies like the yen, but also against the USD specifically because the USD is weakening. Why is the USD weakening? Stimulus. Trillions of dollars of stimulus being handed out in the US, that weakens the USD. Okay, and so the dollar has been very weak, allowing other assets to climb against the USD, namely in this headline, the GBP, otherwise known as the sterling, and also other assets like commodities. Oil can more easily climb when it's paired against a weak USD. Gold can more easily climb when it's paired against a weak USD. And you might think, why would gold climb if there's positive sentiment? because gold investors don't like inflation on the US dollar. And with all the stimulus being handed out, that could be an impetus for gold to climb against the USD as the USD loses value, causing inflation on the USD and maybe bullishness into gold. That's a general effect. It's not a one-to-one all the time relationship, but it's a general relationship. As the USD has a lot of inflation and weakening, you tend to see gold be bullish. Okay, here's in the opposite direction. US detects first case of this new COVID-19 variant that was first seen in the UK. So that creates some fear on the markets potentially that could come about. And Biden, the opposite of Trump's usual approach, has been very gloomy about the vaccine, saying, oh, it could take 3 years to distribute, kind of feeding into some of the potential fear out there. So that in and of itself is cause for a little bit of caution on the bullishness, because if all of a sudden this new variant of COVID is detected as spreading rapidly throughout major countries, you could see some fear hit the market and a pullback in a lot of these assets that have been climbing, the major indices and stocks that have been doing so well of late. So that's something to keep in mind for potential moves that you don't know when that could happen, when the headline could come that, oh, this new variant is causing huge problems or something, and then boom, you see the markets pull back. Could happen at any time, right? So keep that in mind as a backstory for potential pending orders to have ready. And then we see some good news out of Great Britain. Okay, better than expected numbers here on the economic calendar. These were the scheduled economic announcements that we talked about. So good news out of Great Britain and the European Union. All these were either as expected or better than expected, these announcements that came in earlier. And we've got some announcements coming out of the US, mortgage numbers, housing numbers, etc., coming out of the US soon, and some oil inventories. So a lot of potential for large movement today, especially if these numbers disappoint. You could see a huge pullback in the market. So the idea of these announcements that haven't happened yet is preparing pending orders for the potential for huge movements with those announcements, considering some of these are large scale announcements, crude oil inventories, 3-star announcement, pending home sales, 3-star announcement, etc. Those are high level announcements, and a lot of moderate level and low level announcements as well. So potential for large moves today. So with that understanding of the fundamental situation, you go and you look for technical entry points. Okay, we could start with maybe gold and see how things look for gold. We'll take a look at a few assets and see what's going on. 5-minute candles shows a bit of a support level. I drew down here a support level prior to this session, and it still holds. You see, for those of you that are new to things, support is an area where the price hits and bounces back up repetitively. So we see 1, 2, 3, 4 attempts to break this price level and back up, and then down 1, 2, 3, 4 attempts to break this price level and up again. Okay, so 8 times this price level held. Now, do we think gold should climb fundamentally? We talked about the US dollar being weak because of stimulus. So if you feel that the combination of inflation on the USD and a nice support level, technically speaking, could drive gold up, then we can look at, say, 1-hour candles. We see the support level we drew here, and we could say, wow, the potential for this to climb, could it, without even breaking a major resistance level, it could climb to 1885. We see it was just here not that many hours ago, right? 1, 2, 3, 4, 5, 6 hours ago, gold was at 1885. So that's a low risk move to say, fundamentally, it seems gold should be able to potentially climb against the US dollar. I don't have to risk much to get below this support level that held for quite some time. So 1876 maybe could be a stop loss. So if you drag from your entry point, it creates the ability to put your stop loss by dragging it down, left click and drag. So there's my stop loss, limited risk, take profit. If I'm scalping, there's my first resistance level up here, take profit just before the resistance. There we are, about a 2-to-1 potential profit to risk, okay? Now, I couldn't put AvaProtect on this. I could have put maybe 1-day protection if I wanted. I would need to open it from the web trader platform or AvaTrade Go if I wanted to use AvaProtect on this trade, okay? But there we are. So I made a limited risk move, about twice the potential profit to risk, and the fundamentals are on my side here, right? We did some simulated trades in the last webinar, and we see, you see here, if we go to the 29th, these were from yesterday. So we can take a look and see, we had some turn out nice. Dow Jones was bullish. That was based on technical and fundamental entry points. We had some limited risk. We had a small take here and limited risk with the USD Canadian. And so you see your win percentage can be, there's another one that came through from, oh no, that was last week. So the ones we looked at there, oh no, that was. So we see here another one, 1450 from yesterday on the FTSE. We bought on the FTSE. Why were we buying on those indices yesterday? And the fundamentals came through. We look at the trades and we say, wow, they turned out nice. Here's another one from yesterday. We see 1229. We're buying on the DAX. So we bought on the DAX. We bought on the FTSE. We bought on the Dow Jones. All of them won. We lost on USD Canadian, which we set up at the time, we said as kind of a hedge, that if the indices didn't go good, then maybe the USD Canadian would, based on the fundamentals we outlined. And so we ended up with a better than 50% success rate, but you don't have to have a better than 50% success rate. If you set things up where, technically speaking, you're below the support level with less risk and before the resistance with more potential profit. You don't have to break the price level to take the profit, and you'd have to break the price level to lose. Yeah, Joanna, there are a lot of FX pairings that can look good. Now we see this gold move breaking into the money kind of right from the start here, and the fundamentals are on our side here with this move, and the technicals for that matter. You're asking about Forex, so let's look at GBP USD. Look at how much the pound rose up, and now it reached this resistance. Okay, you see resistance, 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 and it drops down. Okay, now it came rushing up. Why is the pound gaining on the USD? Two fundamental reasons. One, Brexit deal, creating optimism for the pound and the euro, and stimulus out of the US, weakening the USD. So this was an easy buy earlier today. The technical analysis on that, if we go to 15-minute candles, all you had to do was draw your resistance level, resistance, resistance, and then have a buy stop pending order waiting to buy if it broke the resistance, and there it went. You could have had a buy stop that would have kicked in up here. As this candle broke through the resistance, you'd have been in on the upward momentum, and the fundamentals would have been driving that move. Okay, so we're a little late on this climb, but what kind of pending order could you buy if it drops down to this support level now? If it drops back down to the support, this old resistance, now it broke through, so this should be support. What kind of pending order would buy from down here? Buying with the fundamental news, pound against the USD, but waiting for a better entry point down here. What kind of pending order do I need to program if I want to buy from the lower point on the pound? Why buy on the pound against the USD? We just said two fundamental reasons, right? Brexit deal, good for the pound. Trillions in stimulus, bad for the strength of the USD. So buy limit is the type. You see there are 4 types. Buy limit pending order buys from a lower point, and I might say 1.3560 could be a spot that makes sense. 1.3560. And I better get my decimal in the right place. Okay, so there's my pending order. So if this drops down to this price level, okay, right where I drew that red line, I put my pending order open just before that. If this gets down to that, what should be support level now, I'm in on a buy from an opportunistic spot, right from where you see this slope go up. This is my entry point on my buy limit if it pulls down. Waiting for an opportunistic entry, hoping it pulls back down because I really want to buy on the GBP USD, but not from the high point right now. That's the strategy we're going over. Buy limit, waiting for it to drop before I buy in the direction of the fundamental news. Okay? Correct. Many of you typed buy limit. I have a request to show gold, so let's do that. Here's gold. We already looked at it. We did a move on gold where we bought. Why did we buy on gold in this simulation? Not because I'm telling you you should buy. I'm not giving you financial advisement. Everything we go over is for educational purposes, okay? Not financial advisement. But if you understand the fundamentals, you see why you might buy on gold when we did, right? We have the support level here, which we saw on the 5-minute candles, right? Support, 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 up. Support, holding, 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 up. So we see the bounce off the support, so we buy. Where's the first major resistance? If we look at the 1-hour candles, right up here. That's where our take profit is, just before this high point that it dropped from just about 6 hours ago. So we're hoping it returns back to that high point, which it very well could do because the news hasn't changed. The USD still has trillions in stimulus and still is very weak. And so gold could easily rise back up against a very weak US dollar. Okay. Joanna, if you wanted to see anything else on gold, let me know. This is the short-term scalp move. Longer-term move on gold, something different, right? Although the longer-term view many have on gold is buying, thinking that gold could reach this high up this way. Remember, not that long ago, it was well over 2,000 per ounce. So it's got potential. Gold has potential. If the dollar continues to have inflation and weaken, potential to climb back towards this high that it reached not that long ago. I'm not saying it will, but you see the potential. Okay. And if more fears hit the market with the new COVID strain, that also could drive some movements with gold as well. So potential for large movement. Right now, we're looking at smaller scalp type move on the 5-minute, 15-minute, 30-minute candles, looking for this move up to here. Okay. Now we could look at GBP USD, which we did a buy limit potential. Hopefully, we're hoping it will drop down there. And what if you say, but what if it doesn't drop? I think the pound could continue to strengthen. Well, then you do a market move, right? You could have the pending order down here if it drops. You could do a market move now, right? You could buy or you could sell. If you think it's going to pull all the way back, you sell on it here. It has the potential for a pullback. I like to pick and choose my entry points a little more than that. So I like the buy limit in this example off the support level down here. If it reaches, right? Now, this is an alternate support level here. Okay, you see this was resistance, 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 resistance. That was old resistance, and now it's above that. So that could be the first support level to potentially buy from. So if I want to get in quicker, I could say, you know what, if it reaches this support level, then I'll buy. Okay, that's a compromise. If I was not wanting to be so patient, but I'm hoping for some pullback. Okay, so there's flexibility there. With the fundamental news on your side, maybe you see that as appropriate. Any other assets request? I see silver and oil has been requested. So silver will look similar to gold. Let's look at oil first. Okay, oil responds bullishly to stimulus. Okay, so if the US passes this stimulus with the additional stimulus, they already passed some, They're trying to increase payments to US citizens from only $600 to $2,000 for each citizen. If that looks like it's going to pass, that could be a stimulus for crude oil as well. No pun intended. So if the economy is going to get a big boost from larger stimulus checks, then you could see that be a bullish impetus on oil to climb. Okay, so if that's the expectation, then you start to look for entry points and you say, okay, I see resistance right here. Okay, right now we're at a resistance level. Resistance, down. Resistance, down. It broke it, but then returned right below, and that became resistance again right in this area. So if this breaks above the current price level, say to 48.6, then or 48.65, then we've broken that resistance. So a pending buy stop on oil. Remember the pending orders where we're waiting for the headlines that might come? That's an example here. We're saying, okay, I'll buy from a higher price because if they get a deal in the US and oil breaks this resistance, then I'll get in on the uptrend, right? So 48.65 makes some sense there with this strategy as an entry point that if it breaks that resistance, you're in. Your stop loss then would be back down here for limited risk, like 48.15, risking only maybe 50 cents per barrel, 48.15. And where would my take profit be? Let's have a look. Okay, so pending order, if it breaks through the resistance, you're in on a buy. Stop loss back below that, wouldn't even have to risk 50 cents. I could move the stop loss up a little bit. Okay, risking maybe only 40, 35 cents per barrel. If it breaks through that resistance, you're in up here. And we have to look at 4-hour, one day candles. The next resistance is up here around 49. You see that? It reached 49 not that long ago. So 49.24. So if we say 49 even, that could be a spot that would make sense for a take profit. So 49 even. Okay, so potential profit and risk are about even in this setup. If it breaks through and triggers, about the same distance to my take profit as I'm risking. And so you can play with that. You could say, no, I want to risk less. It's still below the broken support. So maybe I'm risking about 2/3 of my potential profit. So I have more potential profit than my risk. It has to break this resistance before I get in, and I take my profit before it hits this high up here. And I can play with my take profit as well and say, you know what? It's actually a little higher. There's the high that it reached, 49.24. That's just before the high. So now my potential profit is more than double my risk. And I think I like that setup better because I'm still taking profit before this resistance point up here. And if it's major momentum, once it breaks the resistance, it should not pull back down if it's a true breakthrough. Okay, any other questions, comments? Metchemo, I'm glad GBP USD went your way. Yeah, the fundamentals were behind that for sure. The Brexit deal and the stimulus out of the US are both helping the GBP rise against the USD. So any pullbacks on the GBP USD could be opportunistic entry points, technically speaking, if you believe that that movement can continue for the pound. Okay, and the fundamentals are behind that absolutely could continue. Okay, very nice comment. Thank you for that input. We'll go one Forex pair example, another one here, and then I think we'll call it quits. So if we look at Euro USD, this is the same situation as the GBP USD, right? USD has reason to weaken, Euro has reason to strengthen. We see that this, if we go to the 15-minute candles, already had a pullback and it started to climb. Okay, I see a support level right about here. This was resistance, and now it's back above and kind of bouncing in that area. If you want to diversify with this, if you've already done GBP USD as a potential buy, maybe you say, okay, instead of Euro USD, maybe Euro JPY. Okay, and so let's look at Euro JPY. That looks like a little better entry point if you think the Euro should climb. So as we look at 4-hour candles, wow, look at that entry point. Look at this support level. Used to be resistance. This whole area was resistance. We see it was hitting and dropping, hitting and dropping. This whole area, it kept hitting and dropping with a little bit above and back down. Hit and drop, hit and drop, hit and drop. Now it's above that, and it's pulled back down to this area, this zone of resistance. It's pulled back down from the top side. So this should act as support potentially here. Now, if we go to 5-minute candles, we see, okay, maybe it's still dropping a bit. It hasn't bottomed out yet. If we go to 1-hour candles, it looks like a little wick on the bottom, and it's just above this support level here. So maybe I take a shot here. Euro JPY, market buy, and put my stop loss below this wick. I don't have to risk much to get below this wick. So I can click on this, say, okay, I'll put my stop loss right down here. Okay, limited risk, very limited. I'm just below this zone of support. It would really have to break into it to hit my stop loss. And my take profit, I can put back up where it was just a few hours back, 127 or so. So maybe just before 127. I could modify, take profit, 126 and change, right? 126.90. So there's my take profit up here, about 5 times more potential profit than risk. And I can play with this take profit. I could say, you know what, maybe just to this resistance level here. Okay, we see this was support, 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 and up, support, and up, and then it broke through. So the pullback is more likely to reach here than it is to reach all the way back here. So if this pulls back, this is the first resistance level right here. And I still am looking at twice the potential profit approximately to what I'm risking. So if you're scalping, that's your move. If you're more patient, your move maybe is way up here. Okay? You obviously have the option to do as you see fit. And the fundamentals are on our side here. Brexit deal, that's huge news. Why shouldn't the euro strengthen back up? We're getting an opportunistic low point in what is a greater uptrend. So it looks like a nice spot to get in, okay, with limited risk. Combining fundamental news, the wind at our back, and the technical entry point favorable. Sebastian, yeah, it's almost the only way I work. It makes sense that you work that way as well. And you see things start out, for the most part, in the right direction with most of these moves, just like our last session yesterday. All right, so thank you for joining. Happy New Year's to everybody. This is the last session until next week. So good luck with your trading these last couple days this year. I'm wishing everybody a prosperous and healthy 2021. And till next year, good luck with your trading. Bye for now.